Alright everybody, welcome along to this Monday afternoon market recap. We do have about 15 minutes left in today's session. However, there are a few things that I can point out to you now and I do think will be of tremendous value to you. This is the chart of the Dow Jones Industrial Average on my screen. You can see we are up about 113 points. What makes this chart very nice is that it looks as though we've now definitively broken above what has been a rather range-bound period for the industrial average, and it has opened the door for the industrial average to gallop very quickly if it chooses to do so up to 26,435. The reason I say this is because, again, this takes us all the way back to the open window, which still needs to be filled, dated towards the end of January 2018. The S&P 500 and the Nasdaq have closed their respective gaps. The Dow Jones is the last market to actually make that breakout, and it is lagging, of course, the other two closely followed markets. And in the past, we have spoken about this trade opportunity and trade setup as a short-term arbitrage opportunity. That, as at the moment, is working out, and we are seeing a continuational move back up towards to close this window. Now, taking this one step further, if you have a look at the Dow Jones Transportational Average, you can see that during today's session on Monday, we have come all the way back on up and actually retested those highs that we established earlier on in the period of that same month back in January. So the transportational average is leading that of the industrial average. The good news is that the transportational average has finally made that 100% take back of that waterfall sell-off that we saw very early on in the calendar year of 2018. So again, the odds of those diamond positions that we are currently holding, that we have been slowly walking into over the past number of weeks, again, talking about that arbitrage opportunity, it is looking to play out more or less this week. That was our analysis leading into the week. And for those of you who have been actually accumulating those positions over the past number of weeks, now's the time where you should be getting that payoff, which is very exciting for a lot of people. Now, continuing on with some of the analysis, what I'd like to do is go through a bunch of, some of the trades that we follow on the left-hand side of our screen over here, one of which is Netflix. Now, we've been waiting for Netflix to actually set up that of a reversal candlestick. The reason we say that is because, again, we have this open window that we need to close. Also, on top of that, we have come all the way back on down to this old resistance, turn new support. Yes, we did overshoot it on Thursday and Friday of last week. I was a little bit personally surprised about that myself, but this is the candlestick print as at Monday, an outside day engulfing Morobozu candlestick, which is the first indication that this is going to be that of the bottom and that we are going to use this current handle off from 310. We're closing very close to 330 at the moment, which is going to help propel price all the way back up to roughly $400 per share. So I know a lot of people follow Netflix. I love trading Netflix. This is really a great trade setup when it comes down to the technical analysis of it, especially on a swing trade time frame. And this is the first candlestick of confirmation at the right location, mixed with a bunch of other analysis that we have walked through over a rather prolonged period, really taking us back to the late period of July where we first established this trade setup. Well, this is now that secondary push where, again, I assume it's going to take us up to about $400 per share. Have a look at the oscillators. The Stokes is a little late to the party. The MACD is trying to turn up, and the RSI is just very aggressively shifted off from those oversold conditions, which is always going to be the leading indicator of these three oscillators. So nice little trade setup there. You can think about, or at least break down, the risk and reward ratio for yourself. But really, if you're not in the trade right now, if you can't monitor it intra-session, the trade setup will essentially be the break of the high being Monday's candlestick. The stop would have to be placed below the low of Monday, and then your open target will be all the way up here, just shy of $400 per share. So a pretty decent trade there on Netflix. The other stock, of course, that I wanted to speak about was Caterpillar. Caterpillar is one of those shares that has come all the way back on down and retested its primary bullish uptrend, which is fantastic. We saw that last week. You can see on the weekly candlestick, we have that of a hammer type of candlestick at support being just below 140, but also a successful retest and hold of this trend line on my screen. You can see that we are starting to see that bounce off from that bullish primary trend line, and the trade setup was 139.59 all the way up to, even as high as 156. That's essentially the DNA of this trade. So again, the correct entry location was as close to 137. We'll see whether or not we do see a little short-term pullback, or if we come on back down and actually retest again this primary trend line. But again, based on a risk and reward analysis, you can be looking to actually nibble on a bunch of positions above the swing highs of both Friday and today's candlestick. And your target is going to be, first of all, the bottom of this gap at 152. But there is a good chance that we will gravitate a lot higher, or a little bit higher anyway, up to about 155. Now, this is contingent, of course, largely on what happens with the industrial average. Right now, we are bullish on the industrial average. We have been bullish on the industrial average for about a month, or very close to a month at the moment. And again, this is coming back and it's really guiding us in a lot of positions moving forward. What we're seeing is a lot of individual trades actually confirm our suspicions on the industrial average and on other markets as well. Now, one of those other markets I'm going to navigate back into a couple more stocks before I end this Monday afternoon market recap. But one of those stocks is the Russell 2000. You can see right here, we've had this target at 1738. This has changed by a couple of points over time. Really, we're just moving it up with this back test of the primary trend line from roughly 02 through to 2007 prior to breaking that on the Russell. I can go out and show you this. I have to go out to a really big screen all the way back to 2003, or a longer term sort of viewpoint. You can see 2003 through to 2007 when we actually broke this, and that was what ushered in that of the correctional type of move, which took us more or less all the way back down to the beginning of that bull market in 2003, but back in 2009. Since then, we have been in varying levels of decelerating bullish fan lines, which is fantastic. But what's most important at the moment is this back test, the extension of this trend line, which takes us all the way back to this period. Now, if you keep casting your eyes over to the right-hand side of my screen, I'm zooming in, I'm zooming in, I'm zooming in. That is why this sort of target at the moment is a little bit fluid. But it is very close to 1738. Now, what we're seeing on the daily time frame of the Russell 2000 is a market which is just coiling and waiting to break out. You can see that very defined area of resistance. You can see the rising support area. This is also in alignment with this rising intermediate trend line holding up price as well. So everything is bullish on the Russell 2000, all right? It's the same is true with the transportational average. The same is true with the industrial average. We're sort of consolidating a little bit on the S&P and that of the NASDAQ. But what we're looking at the moment is, let's just say that hypothetically we close at 1,700. We are looking at about 40 points until we really need to begin to pay very close attention to what happens up and around this resistance area. Now, obviously, it's not going to be 1738.70. It may move on up to about 1747 or something like that. But it's generally in this vicinity, in alignment with that back test of what has been a past bull market, which ended back in 2007 prior to this current economic expansion continuing. And really, again, just a reminder, on Wednesday, I do believe that this is going to be statistically the longest post-war bull market in history, out of, I think, the 13 complete cycles that we have had between economic expansion and that of, again, contraction, all right, bull and bear market. So that's a rather impressive stat that you should all be made well aware of, because I think there is going to be a lot of celebration come Wednesday when you have a look at the media reports about the market and the state of the market moving forward, okay? Getting back into a bunch of individual trades, we've gone through, NFLX Caterpillar. Let me just quickly bring up BIDU. Again, a very similar type of trade setup. It does seem to be holding that 210 pivot. The long trade was 222.44. We're looking at this coming back up and closing 245.76. With these trades, and again, largely dependent on the markets, you may have to sit through a little bit of chop. That has been really the story of 2018. A lot of volatility, a lot of indecision, a lot of back and forth. And I think that is going to remain rather persistent. However, there are still some pretty nice swings in price, and one of which is BIDU from, again, 210 back up to 245. We may go up as high as about 250 on BIDU over the coming weeks. That's another exciting trade that we've got, or that we have been paying very close attention to, and the setup actually triggered late last week. Another share as well is that of Tesla. Now, Tesla is sort of a different type of scenario. Most of the stocks that we've been looking at are actually bullish. Tesla, however, has been that of a reversal up and about this 380 handle again. This went parabolic a couple of weeks ago after Elon Musk's tweets about taking the company private. Since then, those rumors have been largely squashed by members of the board, and there are some probes potentially into the legitimacy as to whether or not there is going to be, or at least he will be, or Tesla will be, liable for those words expressed if they're not proven to be true, if they're not really substantiated in any weight of evidence as to the undertaking of such a process. However, what you can see at the moment, and I was reading a bunch of articles on this today, was that since that tweet back at the early stage or the early period of August, the net short position has actually built a further 1.2 billion. That's with a B, not million, billion on Tesla itself. So what you've seen is Tesla roll from as high as 380 back down to, first of all, close the window at 300. But today we actually overshot it down to 290. Now, very similar to what I've spoken about on Caterpillar and BIDU, I don't think that this is going to be, all right, the end for Tesla. What I'm expecting to happen is that we are going to actually hold, probably at 290, probably around psychological round number of 300. You can see we're pushed back. We're at 304.14 at the moment. But again, Tesla's not really a great stock to be looking to trade in terms of a swing trade at the moment. I do think eventually, or sooner rather than later, it is going to break loose. And when it chooses to do so, we will take advantage of that. But I just wanted to remind you that a lot of this artificial boom has now turned to a bust, and we're more or less unchanged prior to when he actually released that ill-informed sort of tweet. All right, so that's Tesla. Nice little counterattack candlestick here, but it's not enough to go long, not to the justification that we have with Caterpillar or Netflix or BIDU, so to speak. Now, I've got two more companies I want to quickly talk about, one of which is Twitter. Twitter is moving into a calling type of pattern. We are more or less going to be in a full-blown Bollinger Band squeeze probably by the end of the week. Big statement to make, I know, but these bands, both the top and the bottom, are really squeezing very, very quickly. And you're going to see them move very close to price action. You can see since earnings, we have largely just moved sideways. 32, I mean, I can count the number of sessions. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. And I think that if we don't see a reaction off from this declining 18 simple moving average, which you can see on my screen right now, if essentially we can just move sideways and allow this bottom band to continue to push up and this top band to pull down, what you're going to see is a full Bollinger Band squeeze, which should take us back up to about $42 per share. And this is sort of the theme at the moment, shaping up on a bunch of tech companies, one of which, or another actual trade as well, and this is going to be the final stock for this Monday afternoon market recap, is that of Facebook. So Facebook, it has had a little bit more volatility. You can see that it's done, or at least it hasn't moved perfectly sort of horizontal in a really confined trading sort of space. Instead, we're seeing a little bit of oscillation between the peaks and the troughs. You can see, of course, the peak up here and two troughs. Now, this is starting to look like potentially that of a double bottom. I don't like to call this a double bottom because it's not really in the right location. This is generally called double bottoms towards the end of defined bear markets. But what is happening at the moment is that Facebook seems to be treading water, and that's largely what we've assumed, which is going to play out very similar to Caterpillar when it comes into, or when you take into consideration that of the primary bullish trend line on Facebook itself. You can see down here we've got multiple touches, 1, 2, 3, 4, 5, and then possibly a sixth at the moment. If I go back into the minor level, you can see that, well, this is what we're looking at. Either a double bottom is under construction again, which would be the break of the neckline, which would take us back up to 215, or possibility number two is that we actually see a little bit of weakness, short-term weakness on Facebook. We blow down below 170.60. We go as low as about 160 at maximum. All right, probably somewhere towards 165. And then this is going to be the turning point on Facebook, which will take us from 165 all the way back up to 215. So that's going to be, by my calculations anyway, about 35 up to 200. Plus another 15, probably about a $50 move on Facebook, depending on whether or not we get the turn at 165 or whether this is going to be the basing pattern more or less at 172, and then this turns out to be a double bottom. So keep an eye on Facebook. Both scenarios at the moment are both bullish. I do want to stress that. And you cannot get bearish on Facebook unless it definitively breaks below its primary trend line. The reason I say that is because if you go all the way back to the year 2013, when all of this really began to occur, it's just been that of a buy the dip opportunity at higher lows, all right, at higher lows, which is the textbook definition of a bullish trend. So I just wanted to make that point on Facebook, all of which really, when it comes to the analysis, is short-term favorable, i.e. short-term bullish, whether it's the industrial average, the transports, the Russell. This also extends into the S&P 500 and the NASDAQ. All right, and a bunch of individual stocks as well. Google's another stock that has come back down to retest that handle of 1,200. I'm expecting this to hold and then to see another rally back up to these highs. But then what's most important is what's going to happen when the industrial average closes its window
and to see what happened with what the Russell does, pardon me, at that upper figure that I quoted just before at about 1,740. Because if we start to see a reversal in breadth, it's going to begin on the Russell 2000, and we might begin to see some rather compelling divergences, which are going to alert us to potential weakness, probably more so on the intermediate and longer primary trend in the opposite direction if we begin to see those signals. So very interesting time in the market. So I hope that made a little bit of sense to you on a Monday evening. Who knows, potentially you're watching this on a Tuesday as well. So if you have any questions, please email me, success@pivotpoint-trading.com. Until next time, everybody, stay safe and well, and I'll see you very soon. All the best. Goodbye.